Welcome to this YouTube channel. In this video we are going to talk about investing in real estate, tips and strategies for success. So before starting the video, please like this video and subscribe this YouTube channel for future updates. One of the tried and true ways to make money has long been through successful real estate investment. Purchase or obtain the land title, enhance the property's enhanced agricultural potential, construct rental housing, or increase the investment property's tenant appeal to enable you to raise the rent. These are typical strategies for succeeding in real estate investing. Not just where individuals prefer to live, but also other factors in the real estate market are always shifting. But as we all know, real estate offers less volatile returns on investment than the stock market. The length of time you keep your investment property reduces your chance of loss in real estate. Your property's worth increases as the market does. This is a summary of the steps you need to take to succeed in real estate investing. Number 10. Making smart market selections and investing timings. Understanding your local market is more crucial for profitable real estate investing than simply being aware of trends on a national level. The variables at play in your particular real estate market will have the greatest impact on your purchase and its outcome. Avoiding really hot markets is a good general rule for real estate investing success. Some local real estate investors may talk about how much their homes have appreciated or how rates are on the rise, but you run the danger of investing at the peak of the market and losing money. Due to the need for financial gain, real estate markets move in cycles, and each market is currently at a distinct stage of the housing cycle. You need to locate markets that are expanding, where sales and prices are increasing. The cost of living is favorable, construction is minimal, and capital investment is rising. Number 9. Buy cheap. A dividend, paying stock and real estate investing are comparable. The return on investment depends on how inexpensively you purchase the commodity. You must, however, consider the return on investment. You can spend little money to purchase a modest home in a dangerous area, but you won't make much money off of it either. Number 8. Access the secret market. The best scenario is purchasing real estate from a bankrupt seller, since you can obtain it for much less than its fair market value. Forget foreclosure auctions. While they can produce savings, you frequently locate homes that require extensive repairs. Alternatively, search for properties with distressed sellers who haven't yet listed them. The perfect sellers are a divorcing couple or a family looking to recoup mom's estate. They only care about making a profit, and the buyer will likely receive a well-kept home. Number 7. Recognize your costs up front. The importance of knowing your costs up front cannot be overstated if you are new to the real estate investment industry. Not merely the price of the property and the commission paid to the broker. You'll have to pay for repairs, and a lot of newbies to real estate investing aren't sure how much it will cost to remedy the electrical issues, rebuild the foundation, and get rid of the bug infestations. Don't imagine that painting a little on the weekends will fix the issue. Number 6. Recognize the market. Knowing the market is one of the best methods to steer clear of issues when investing in real estate. You can assess the cost of an investment property by having a thorough understanding of your local real estate market. Know the average house value per square foot in a neighborhood and the potential rental income for a particular investment property. Make improvements to properties that will increase their appeal to potential buyers. Never, for instance, lower the number of bedrooms in a neighborhood that welcomes families. You shouldn't also make the master bathroom smaller or the closet smaller to install a hot tub that few people in the neighborhood would use. If there isn't much demand for a pool, don't tear up a nice yard to install one. Choose the greatest real estate markets, such as the metro Atlanta area, which has experienced a phenomenal real estate boom. Demand has led to a 10% annual increase in property values in the Atlanta real estate market over the past few years. Atlanta's housing market declined in 2017, allowing for price adjustments. While current average housing prices are similar to their peak in 2006, when inflation is taken into account, they become more accessible. Number 5. Control your risks when investing in real estate. You may control risk in a real estate investment in several ways. First, avoid getting into a lot of debt. Plan to put down at least 10% when purchasing an investment property that is for sale. A 20% down payment is preferable since it gets rid of private mortgage insurance and frequently results in a reduced interest rate for the loan. Maintain a sizable cash reserve. Next, if you have the cash to carry the property for a long time before it needs to relocate, you'll lower the danger of having to sell a home quickly at a loss. A higher cash reserve will also enable you to cover unforeseen repair costs before listing a property for sale. It is conceivable to turn to a hard money lender to borrow the final $20,000 needed to renovate a house, but doing so eats into your profit margin and carries a hefty interest rate. Your chances of succeeding in real estate investment can be greatly increased by effectively managing hazards. Then, take steps to mitigate the risk, such as avoiding the fixer-upper you're worried would be a financial mistake, or strengthening your financial situation before you purchase it. Buy ready-made properties instead if you can't manage the possible stress of fixing and flipping. Number 4. Choose the best, not best in class. Making an effort to make a property the best in the neighborhood is a common real estate investing blunder. They might strive to transform working class houses into luxurious residences by renovating them. Something cannot be sold for the same price as it would be in an upscale neighborhood. You ultimately lose money. Building a house too densely is wasteful. Instead of attempting to make an office building the most opulent or exclusive item, opt for best in class features. Fix anything that is broken or damaged first. Then make subtle, inexpensive improvements that stand out. One example that comes to me is painting over a single color with 2 tones. Another is adding more practical garbage cans and soap dispensers. Leave out the Korean or granite countertops, the best equipment, and the pricey decor. Number 3. Increase real estate value. Find strategies to increase the property's worth so you can profit more from the same investment. It can entail leasing space to a bank so they can set up an ATM. You could lease out space in the lobby for a small commissary, bringing in rental income from something that would not have increased the company's cash flow otherwise. It is possible to search for value-added services in an apartment building. Provide trash pickup, for a little monthly cost, from someone's door to the dumpster, as an illustration. Or have the building hire a concierge or security guard. Now that the property is more appealing, you can increase the rent. This also applies to house flipping in another way. Instead of buying the house, remodeling it, and then selling it to a home buyer, rent it out to someone. Start looking for buyers as soon as the tenant has moved in with a lease. This type of rental property is referred to as turnkey, and it is simple to sell to a novice investor who wants to get started in real estate investment right away. Number 2. Understand the guidelines for investing in real estate. Don't convert that basement into a second rental unit until you are certain that it is legal to do so. If local zoning regulations forbid it, don't turn the first floor of the building into commercial space. When adding a small sandwich shop to a break area filled with vending machines, be sure to check the regulations for food service businesses. Never assume you can expand a building by adding a second story or another room. Before you begin any work, be aware of the extent to which permission is necessary. Number 1. Think about investing in non-traditional real estate. Never forget that buying single-family houses or apartment complexes can both be profitable real estate investments. You might make investments in warehouses, industrial space, office buildings, and storage complexes. This all brings in rental income. Under a triple net lease, where the tenant is responsible for basic insurance, as well as paying the property taxes and upkeep, you might be able to lower total costs when renting out offices and industrial facilities. The result of your investment is a consistent cash flow with little out-of-pocket costs. What do you think about this video? Do let us know in the comments section below. If you enjoyed this video and want to hear from us again, be sure to hit that subscribe button before you go.